Welcome everyone. My name is Peter Ashton from Recognia, and welcome to this webinar entitled Introduction to Technical Insight and Strategy Builder. In this presentation, I'd like to walk you through a number of different topics. We're going to begin with a bit of an introduction to Recognia. We're going to talk a little bit about the value of technical analysis, and we'll go through some demonstrations of how to use technical insight, a tool that's available to you as Bell Direct account holders. And we'll go through how you can actually use this product to do a number of things. First of all, we'll talk about how you can uncover new investing opportunities using technical insight. We'll talk about validating ideas and timing. And last, about how you can manage your risk using this product. I'm then going to do a transition and talk about why you might want to consider using an investment strategy if you're not using one already. And we'll talk about a product from Recognia called Strategy Builder, a tool that helps you to build and test and share an investment strategy. We're going to be dealing with all questions and answers at the end of this presentation. So I'm going to go through my whole presentation, which would take about 40 minutes, and then we'll actually have a question and answer session at the end. Bit of a disclaimer before I begin. This information presented is being done for educational and informational purposes only. We're going to be talking about a number of individual stocks as part of this presentation, and these stocks are offered as illustrations only. None of the information contained in this presentation is intended to be a recommendation by Recognia to buy, sell, or hold any stock, option, or securities. So a bit of an introduction to Recognia. Recognia is the industry leader in providing actionable investment research for self-directed or execution-only investors and traders. Our products seek to help automate the investment decision-making process, thereby allowing the investor or trader to cover more ground than they'd be able to on their own. We recognize that every trader is also a student, and therefore we try to present our tools and research as part of a guided and interpreted experience. We've been at this for over 10 years, and we've won a number of different awards for our products. So with that said, let's talk a little bit about technical insight. So technical insight is a tool for automating the standard practices of technical analysis and chart pattern recognition. So that's a very important point I'm making. So we're not claiming to have a crystal ball that can predict the market direction with absolute certainty. Rather, what we are doing is basically taking the definitions of different technical events as you'd read about them in any textbook on technical analysis and automating that recognition such that you can cover much more ground than you could otherwise. So a good technical analyst maybe can look at 20 or 30 or maybe 50 different charts in a day. Well, technical insight is a tool to allow you to scan every single stock in the market every day and find not just a few different kinds of events, but in fact over 65 different kinds of events on every stock. This is going to basically allow investors to do three things. It'll help them find new opportunities, find out what's poised to move, to validate their decisions to see what the price action tells you, and last, to manage the risk, to tune into signs of strength and weakness. So many of you may be using technical analysis already, but for those of you who aren't, I want to just spend a minute about why you might want to think about using technical analysis in your trading today. Technical analysis is really all about looking for patterns and relationships in the price and volume history of stocks to help identify the attitudes of buyers and sellers. So if we think about it, every single trade on an exchange represents an agreement between a buyer and a seller for what is the fair price of a security at one particular point in time. That helps us to identify shifts in the supply and demand for stocks in the marketplace. And that can also be used to help us make good investing and trading decisions. So as an example, I also mentioned that for those of you who are just getting started with technical analysis, I really like to talk about this book called Technical Analysis of Stock Trends. It really is kind of the Bible of technical analysis. It was written by Edwards and McGee back in the 1950s, and it still is one of the best books on this subject today. There's a quote from this book I'd like to just read to you, which basically underlines why technical analysts like to study the price. The market price reflects the hopes and fears and guesses and moods, rational and irrational, of hundreds of potential buyers and sellers. Price is the only figure that counts. So that reflects a belief in technical analysis that the price really reflects many, many different things. It reflects the fundamentals of the stock, because those are priced into the fair market price. It reflects the news. It reflects the general market sentiment on a given day. So all those things are taken into account by the price itself. So by studying the price, we can understand many of the different factors that go into driving the price of an individual security. So let's look at an example. This is a particular stock which has had an interesting series of price movements. It had a long, several months of consolidation where not too much happened. Then there was a very big run-up in the price of the stock, followed by a big decline, a big run-up and a big decline, and kind of a long consolidation period for a number of months where not very much happened to the price of the stock, just until it actually started a big rally and actually moved from about $10 to almost $30 in a matter of about 1 month. So wouldn't it have been nice to know that this consolidation period represented a great opportunity to be buying shares of the stock to be poised for this big run-up which was to follow? Well, that in fact is exactly what technical analysis can help you do. So this is an example of a particular chart pattern called the head and shoulders bottom. This is an inverse or upside down head and shoulders. So this is the left shoulder. The head is the deepest point of the price chart. This is the right shoulder. And this horizontal line across here is called the neckline. That neckline represents a point of resistance to the price of the stock. So breaking through that neckline confirms the pattern and indicates that a higher price is likely to come. Now, that's not to say that you can't consider other kinds of information as part of your trading decisions. And in fact, the best traders actually use many, many different kinds of information. So many of you are familiar with fundamental research and are probably using it today. And fundamental research really is all about different ways of coming at the intrinsic value of the company. That'll involve things like accounting ratios, things like price-to-earnings ratio, price-to-book ratio, and so on, SEC filings, analyst ratings, earnings forecasts, and so on. As a very good contrast to that, though, we have technical analysis. And technical analysis is about things that help us to determine the sentiment or the balance of supply and demand in the marketplace. So moving averages, support and resistance, price patterns, overbought and oversold indicators. All of these are interesting things from the perspective of technical analysis. So what I'm going to talk about is a number of different types of technical events that you might want to think about using as part of your trading. And then we'll also talk a little bit later on about how technical insight from Recognia can actually help you to detect these particular patterns. So one of the first classes of events we're going to talk about are short-term patterns. And these are patterns that are based on the shape and relationship of candlesticks or price bars. So here's an example of a very well-known candlestick pattern called the hammer. So the hammer is outlined here in purple. So it kind of looks like a hammer. There's a long handle, and at the top is the hammer head. So what this is telling us about the market sentiment on the day that this hammer occurred is the following. This particular stock was in a long decline prior to this hammer occurring. So at the start of trading on this particular day, the bears are expecting more of the same. They're expecting that downtrend to continue. So on this particular day, the stock actually opened near the high of the day. During the day, it ran way, way, way down, but it was able to rally and come back and close again near the highs of the day. So what does that tell us about the market sentiment? It tells us that people started the day being very, very bearish and the price went much, much lower, but something has happened during the course of the day to change the sentiment, thereby causing the price of the stock to close again near the highs. So hammers are very bullish signals. They indicate a reversal is possible from a decline into an uptrend, and that's what actually happened in this particular case. Now, of course, the trick is you're not going to know what comes after, so you're going to have to basically look at this long decline, look at the hammer, and then say, I know this is a reversal signal, so I'm going to either maybe take a small position or maybe watch the stock for a day or two and see what happens. And if that uptrend actually does start to move, I'm going to have got this on my radar and basically be able to start accumulating more shares of the stock. Now, the bearish counterpart of the hammer is called the shooting star. So these are two examples of shooting stars. So the shooting star kind of it does look like a shooting star. It's got a long tail behind it and kind of a bit of a head at the bottom of it. So the sentiment of the shooting star is as follows. Let's look at this one here on the right. So we've got a long uptrend continuing. So again, the bulls are thinking that this is going to continue. We have the stock opening near the lows of the day. It runs much higher, but somehow something happens during the day and it actually closes again near the lows of the day. So this is really the opposite of the hammer. It indicates that a change in sentiment has occurred from bullish to bearish. So a shooting star is a bearish reversal pattern. So those are a couple of different short-term patterns you want to be aware of, and they're very, very useful in your trading. like to spend a minute talking about another class of events, something called classic patterns. So classic patterns are distinct price swings forming on the shape of the chart, and whereas short-term patterns occur within a single day, classic patterns typically take many days to form. So the best example of a classic pattern is the head and shoulders bottom. You'll hear about this one all the time. Even people who are not technical traders know about the head and shoulders bottom. So again, what this is telling us is we had a long decline here. So the price is basically being supported by the bottom trend here. This is the support level. And this top of the channel is the resistance level. So we actually approached or touched that line several times. But as we go into the head and shoulders bottom, this is telling us that a new level of resistance is developing. So we have the left shoulder. We touch this horizontal neckline. We decline again. We touch this horizontal neckline again and then decline. So this neckline has now become the new level of resistance to the price of the stock. If we're able to break through that resistance level, it signals that we may be in tune for a reversal to an uptrend. That's what actually happened in this particular case. Now, this particular pattern means nothing until it's confirmed. So when you are sitting down here at the bottom of the right shoulder, this is not a head and shoulders bottom. It does not become a valid pattern until you actually break through this level of resistance. Very, very important. Now, something else which is very important from the perspective of technical analysis is that classic patterns also allow us to derive a target price. So the way that technical analysis or analysts do this is they measure how high the pattern is. That's called H. So in the case of a head and shoulders bottom, we're going to measure from the neckline all the way down to the lowest point of the pattern. That is called H, the height. We basically take that height and we add it to the confirmation price, and that gives us an expected move or a target price. We can also derive from the pattern what's called the trading horizon. So we can measure how many days it took to actually build this pattern. So that's this length here, L. And we can add that to the confirmation date, and that can give us a rough indication of about how long we think it's going to take to achieve the target price. These are not hard and fast rules. They're just rules of thumb, but that's something that's very, very useful in your trading because it makes this information very actionable. It tells you what we think might happen and about how long we think it's going to take to occur. And last, we're going to talk about probably the best known class of technical events, which are the indicators and oscillators. And these are typically things like moving averages and other mathematical functions that are derived and can provide interesting trading signals. So I think everybody has probably heard of the simple moving average, or SMA. These are very, very commonly used in trading. The reason why they're so popular is not because that they have great predictive power, but historically they've been used because they were very easy to calculate. Back in the days before computers, it was very, very easy to calculate an SMA. You just basically took the last 50 days closing price of a stock, added it together, divided by 50, and that was the value of today's simple moving average. And of course, the next day you would throw out the oldest value and add in the newest one, divide it by 50, and again get the new value of the SMA. So very easy to calculate. So what I've shown here is a stock chart for Hewlett-Packard. And in red, I have outlined the 200-day simple moving average. In blue, I have a shorter-term SMA, which is the 50-day simple moving average. What I wanted to show you is that these are useful for trading in a couple of ways. So you can see that the 200-day SMA provides a nice level of resistance to the price of the stock. That particular level is actually approached or touched many times, but not really broken through. So if we were to extend this price chart beyond the right-hand side of this particular chart, and the price was to approach it again, we might expect that it would bounce off the 200-day SMA again. If it was to break through, that would be a very bullish signal, and we might expect to start a long-term rally in the price of the stock. Now, the 50-day SMA provides a shorter-term trading signal. So you'll see that several times we've actually approached or touched this. And when we actually broke through, it started to indicate the beginning of a new trend. So here we broke through in the upward direction. You see the stock went on to rally. Here we broke through in the downward direction. The stock declined, rally, decline, and so on. So these kind of signals can be very useful to understanding what the future direction of the stock price might be. So we've talked about three different classes of technical events: short-term patterns, classic patterns, and indicators and oscillators. We've talked about a few examples of each of those. We talked about hammers and shooting stars under the short-term patterns. We talked about the head and shoulders top and bottom, and we talked about price crossing the moving average. But of course, there's not just these 4 different kinds of events. There's actually lots and lots of events. And in fact, this is where Recognia can help you. Recognia automatically detects all the events that I talked about so far, plus all these other events. So lots and lots of different kinds of short-term patterns, many different classic chart patterns, many different indicators and oscillators. So over 65 different kinds of technical events in total. And we don't just find those for one stock chart. We scan every single stock in the market every day and provide you with that information in advance. So what I'd like to do now is actually show you excuse me one moment. What I'd actually like to show you is an example of how I can actually use technical insight. So I'm going to actually transition here and go to do a demonstration. I'm going to go into the Bell Direct website. Sorry, just one second. I just want to make sure everybody can actually hear me here. Before I start, sorry, so just take 1 second. If people are hearing me, you can just perhaps type into the question and answer bar just to let me know that you can hear me. So what I'm going to do is I'm going to go and do a demonstration of how to use technical insight as part of the Bell Direct site. So what you're going to do is, under the Research and Tools section of the Bell Direct site, you can find technical insight. So here it is under New. So I'm going to basically bring that up and give that just a second to come up. And you'll see we have a number of different ways where we can actually get trade ideas from technical insight. So first of all, there are what are called the featured events. So we have the bullish and bearish featured events from technical insight. These represent the 5 most bullish or the 5 most bearish events in the marketplace each day. So technical insight has scanned the entire Australian market, and we've actually come up with these 5 events as being the most interesting ones for the day. So the most bullish event of the day is this one, which is AP Eagers Limited. The second most bullish is Oranton Group Limited, which had an inside bar pattern. The third one is Sirtex Medical, which had a symmetrical continuation triangle, and so on. Now, of course, in every market, there are people who are bullish and people who are bearish. Maybe right now people are starting to think that, perhaps we're getting a little overstretched. So if you are perhaps looking for some bearish ideas, well, here are 5 bearish ideas for the day. In fact, there's only 2 today. So SHL is Sonic Healthcare, and SOL is Washington H. Soul Pattinson. So these are a number of bearish trade ideas for the day. Now, for any one of these, if I want to get more information on this particular event, I could actually just click on it, and this takes me to what I call the event details page. Sorry, that's more details I have to click on. And what this should tell me is more information about this particular pattern. So Sirtex Medical is the company. Here is some educational content about the particular event. The event date was April 3rd. This is an intermediate term bullish event. The last price was $11.34, and based on this particular pattern, we're seeing a target price in the range of $14.20 to $14.90. What I can also do is, this is a 2-year price history for the security, and you can see there's this long uptrend that led into this particular pattern. And because we broke out of the upside of this particular triangle, this is a bullish event. I can also put on here a target price region. I'll say update the chart. And what this is going to do is show me the target price region like we talked about before. So this dark green area at the top is the target price. This is where we think the price is going. And the width of this rectangle gives us an idea of about how long we think it's going to take to reach the target price. Now, something else I'll quickly mention on this page is we can also help you with things like support and resistance levels. So if you wanted to know where support and resistance is found, we can help you. So calculated over the last 250 bars or days, we found support at $6, so way down here, this is support level, and resistance at $11.60 up in here. This is where the resistance is found right now. I can also change the way that that's calculated and perhaps calculate it over a shorter period of time. So if I calculate over the last 40 bars, then I find support at 11.07 and resistance at 11.24. So depending what your trading horizon is, if you're a short-term trader, long-term trader, you can apply these support and resistance levels differently. We can also help you with your stops. So if you wanted to put in a protective stop on a position, Recognia can help you with where that should go. So I'm getting a message here that there's no sound. Let me just double check if I can turn the sound on. I think the sound is on. I'm going to have to just keep on going. So what I can actually show you is how to use a trailing stop. So if I want to use a traditional percentage trailing stop, I can set it here. So I want a Recognia trailing stop, sorry, a percentage trailing stop at 8%. I can calculate that, and you'll see it comes up at 1043. I can also use a more advanced kind of stop, which is a Recognia trailing stop. So I can say I want to have a medium, tight, or loose. What this does is looks at the historic volatility of the instrument and provides a trailing stop which is far enough above or below the current price that you're not going to get stopped out just based on the day-to-day volatility. So if I want to use a Recognia trailing stop, I can recalculate it, and actually turned out it's exactly the same level, 1043. Okay, let's go back to our main landing page, and I want to show you another way you can come at some trading ideas from Recognia. What we can do is go up in here into what's called the technical event screener right here. And if I'm looking for a very particular kind of trade idea, I can use the screener to come at it. So there are a number of preset searches that are part of the screener. So for example, I can show you highly traded bullish stocks, or stocks with a long-term bullish outlook, or say stocks that are poised to move up by 15% or more from where they are today. But if it's something very specific I'm looking for, I can use the advanced screener. So let's suppose I'm looking for only a certain kind of company. Maybe I'm looking for only companies on the Australian Securities Exchange in the banking sector. And maybe I'm only interested in stocks that had patterns in the last 2 weeks, and I'm interested in either bullish or bearish classic patterns. That might be an interesting search I can do. So I could actually say search and see what actually comes up as a result of that. And in fact, I only found one stock, which was Westpac Banking Corp, which had a symmetrical continuation triangle. So that might be a trade idea that I want to go on to evaluate. Something else I can do is I can view this in a number of different ways. I can look at it in the standard presentation, which is what I'm looking at right now, or what's called the detailed view, which gives me more information about that particular event. Or I can look at what's called the chart view, which basically gives me a thumbnail for every single one of all the trade ideas that come up as part of the screener. So that's a little bit about trade ideas. I'd also want to talk for a second about how we can use technical insight to validate an idea we already have. So let's suppose, I've already got a great idea for a stock that I want to look up. So when I was looking at earlier today was Fairfax Media. So let's just actually do a lookup on that particular stock. So what this does is it looks into the Recognia database and brings out all the technical detail that we know about this particular stock. So this is Fairfax Media. This is a 2-year price history for the security. You'll see all these red squares represent the dates at which we had bearish technical events. The green dots represent bullish events. So in summary, we've had 9 bullish and 11 bearish.
The broadcast is now starting. All attendees are in listen-only mode.
Something's happened? People can hear me? Michael? Okay, so let's carry on. So what I wanted to show you is you can actually customize the view in terms of the short-term, intermediate term, or long-term view. The short-term view shows you trade events which are taking place over, say, a 2 to 6 week time period. Intermediate term are events that will play out in 6 weeks to 9 months, and the long-term events will take place in, say 9 months or longer. So we can customize the view depending on the kind of trade ideas we're looking for. Let's put it back to the summary view, which gives us everything. Again, we get a summary of support and resistance levels. We get a summary of the stop price and so on. And if I look at the further down the page, this is a list of all the active technical events in reverse chronological order. So we get the newest events on top. So Williams percent R, for example, was an event that occurred on April 4th and so on. So for this particular stock, you can see that it's been a very bearish view for about the last week or so. But prior to that, things were very bullish. And in fact, back at the end of February, we had an event, a symmetrical continuation triangle, which basically was an intermediate term bull event. So if I click on that and go to that particular event, here is that symmetrical continuation triangle. So I'm going to just draw the target price on here, update the chart. So you see here's our 2-year price history. We had a big rally that started in about November of 2012. You can see here we had our symmetrical continuation triangle. The green dot is where we confirmed it, and this was the target price we had, which was 61 cents to 63 cents. And you'll see we actually went right through that target price before starting to tail off a little bit. So this particular event would have been very, very useful to you if you've been looking to trade Fairfax Media. So before we move on to the next product, I want to show you just a couple more things. I'd like to show you a little bit about the alerts functionality as well as education. So what we'll actually find is that a lot of the real power users for technical insight will tend to use the product almost totally through the alerts. So most of the things that I've showed you so far in terms of gathering trade ideas or doing screens or looking at things like support and resistance or trailing stop levels, those can all be automated via the alerts. So what I can do is set up a new alert, and let's suppose I want an alert that is going to tell me about new opportunities. I can put my new opportunity alert in, and I can say, well, what kind of opportunities I want to be alerted to? Well, I want to be alerted to any event taking place on the Australian Securities Exchange affecting a company in the oil and gas sector. And maybe I'm only looking for a certain kind of event. I want to see like a minimum price of $2. And I want anything that's a classic or short-term pattern that's bullish. That might be a very interesting kind of alert to have. I can customize it further if I'd like to in terms of event durations and so on. But that's an interesting alert that I've set up. So I've now said finish. This is going to set up a new opportunity alert for me that will send me an email each night giving me examples of stocks that match this particular set of criteria. Now, it's also possible to create an alert which will, which is going to alert you to changes affecting stocks in your portfolio. So that's called a watch list alert. So you can actually set up a watch list inside Technical Insight and have it email you about specific technical events affecting your watch list. The last thing I'll mention before we switch gears is the idea of education. So there's lots and lots of built-in education inside Technical Insight. So if you want to learn more about classic patterns or short-term patterns or indicators or oscillators or any of those things, there's lots and lots of built-in education. So if I want to know more about what a bottom triangle is, I can come into the education section for bottom triangles, and I can say, well, here's a description of the bottom triangle. This is what it looks like. These are the important considerations for a bottom triangle. Here's how I trade it, and so on. So there's lots of ways you can use the education in Technical Insight to learn more about technical analysis. And if you forget everything else that I've talked about so far in this demonstration, you can just come to this Help button. So the Help button provides you with a Getting Started guide for learning how to use the product. It provides a number of video tutorials that you can use to go through some of the use cases for Technical Insight. There's some frequently asked questions, and there's also a link to Recognia's help forum, which you can use to ask a question if you've got a real stumper. So with that, I'm going to go back to my PowerPoint, and I'm going to, I'm going to move on to the next part of the presentation, which is Strategy Builder. So we're going to talk just for a moment about what Strategy Builder is and why you might want to use it. So as I mentioned earlier, Strategy Builder is a tool for building and testing and sharing an investment strategy. It lets you build a strategy which is suitable to you as an investor, and you can use that strategy to find a list of stocks that match your strategy at any given point in time, but also to backtest that strategy, see how it would have worked for you if you had used it historically. And that's something very unique in a tool like this. Now, there is no one strategy that's right for everyone. In fact, everybody is different. They have different things that are interesting to them. Some people are growth investors, some people are value investors, some people are focused more on momentum, and so on. There's many different kinds of investors, and as a result, there are many different kinds of strategies. What's important is that you have a strategy. Well, why do we need a strategy? Why can't we just use our intuition? Well, there are a small number of investors and traders that can use their intuition, and they're very successful. But for most people, having a strategy is key to keeping your emotions in check and making logical decisions about your money. What I wanted to go through very quickly is why we need to do that. So people have a lot of cognitive biases that come into their trading. Some people suffer from what's called loss aversion, where they're more focused on avoiding losses than they are in acquiring gains, and as a result, they tend to sell their winners too quickly. There's what's called recency bias. People are more focused on things that have happened recently, and they forget about things that have happened longer term ago. The bandwagon effect, where people believe things just because other people tend to believe them. These are all biases that we have, and they affect our trading. I want to give you an example, which is this particular one. This is a famous study that was done with MIT students, so a very smart group of university students. They were offered a subscription to The Economist magazine, and they had two choices they could pick from. They could get the print and web subscription for $125 US, or they could get just the online, just the web subscription for $59. So when the question was asked that way, the students tended to choose just the online version. 68% said they prefer the online version, 32% said they wanted both. But what if we change the question just a little bit? What if we offer three choices? So you can have The Economist online for $59, you can have just the print subscription for $125, or you can have the print and web for $125 as well. When we asked the question that way, the results were very different. So in this case, 16% said they wanted just the web subscription, nobody wanted just the print subscription, and now 84% of people said they wanted the print and web subscription. So just by giving a third choice, which nobody wanted anyway, I was able to actually change the results of this poll quite significantly. This is an example of a cognitive bias. So what Strategy Builder will allow you to do is build yourself a strategy. That strategy can embody the things that are important to you as an investor. So it can be based on fundamental criteria like I'm showing here, things like price to equity ratio, dividend yield, EPS growth, revenue growth, things like that that are important to tell us about the health of a company, but also technical criteria. So all those technical analysis criteria that I showed you in Technical Insight are also available inside Strategy Builder. We've also recently added quantitative criteria to Strategy Builder. So quantitative criteria comes out of quantitative models. So there are firms which actually build mathematical models which analyze many, many different points of data and are then able to quantify the rank of stocks to say that these stocks are likely to perform better than these stocks. So one of the kind of granddaddies of this space is a company called Columbine Capital. They've been at this for about 30 years, and they have proprietary models that rank stocks. And they do this in many, many different countries, including Australia. But over time, their ranking methodology has tended to outperform the market quite significantly. So they break their ranks into deciles. So the first decile stocks have tended to outperform the index by about 11%. And their 10th decile stocks have tended to underperform the index by about 11.5%. So there's a very strong track record of outperformance of these models. So with that, I'm going to do another segue into a demonstration. And I'd like to show you a little bit about Strategy Builder. So again, Strategy Builder is found under the Research and Tools section of the BellDirect website. So I'm going to go into that. And I have very limited time, so I'm going to go fairly quickly to this demonstration. But what I can do in Strategy Builder is I have a number of different panels on the main landing page. I have my saved screens. These are the screens that I've built for myself. and that I can come back and revisit whenever I want. I don't actually have any built right now. I have what are called featured screens. These are screens that I have actually built for myself, and that have been featured by the broker. So some of these are authored by experts like Recognia. Some have been chosen to be featured by Bell Direct, and so on. You can see the annualized returns given for each one of these. And then there's what are called the community screens. These are screens which other Bell Direct users have created, and they've chosen to share them with the rest of the community. And this can be ranked either by top performing or most recently published. So just to show you what's possible, I'd like to build myself a new strategy from scratch. So when I'm building a strategy, I have the choice of using many, many different criteria that I talked about. So these criteria are organized into folders. So they're what are called the most popular criteria, things like the stock price, dividend yield, 90-day average volume, and so on. Things related to analysts, so for example, the Columbine Capital Quant rankings are shown there. This company basics, things like market cap and trailing 12 months revenue and so on. Metrics related to debt, like debt-to-equity ratio, debt-to-capital ratio, and so on. Dividend-related criteria like yield and dividend growth rate and so on. You get the idea. But I wanted to show you there's also a folder called Technicals, which gives you a number of different choices, bullish classic patterns, bearish classic patterns, and so on. So all the different Recognia technical events that I showed you in Technical Insight are also available as screening criteria inside of Strategy Builder. So let's build ourselves a strategy. I'm going to start with market cap as the first strategy in my, or criteria in my strategy. And what I can do is I can say I only want to pick, let's say, mid-cap stocks. So I'm going to slide my slider here to basically give me a range of around 10 million. So I want to consider any companies that have a market cap of less than 10 million. But I don't want the really big companies either. So I'm going to maybe say that about 250 million is the top end. 270 is fine. You'll notice that this number here updates in real time. This is telling me that in the Australian market, there are 830 companies that match this particular criteria. In other words, they have a market cap between 10 million and 270 million. So let's see, let's pick another one. I also like stocks that pay a dividend. So I'm going to say dividend yield is my second one. And I want, let's say, at least 1.5% dividend. So I'm going to type that in. You'll see I can just over-type this number in this box. So this particular criteria has 459 companies that match. And the intersection of both these criteria is 167 companies. So you see we're very rapidly coming down to a smaller number of companies. I'm going to pick one more based on trading. I want the 10-day versus 90-day average volume. So this is a ratio. This is saying, let's take the average volume over the last 10 days and divide it by the average volume over the last 90 days. So if this number is more than 1, it means the volume is ramping up over the last 10 days. So I'm going to say I want that at 1.1 or more. So it means that the average volume over the last 10 days is 110% of the average volume over the last 90 days. So now I'm down to 36 companies. And if I actually scroll down under Result Summary, here are the first 5 of those 36 companies. So the first one is called Aspen Group. And if I wanted to know why this company was actually top ranked as part of the strategy, well, I can click View Why, and it says that for market cap, it had a market cap of 239 million, which is the very top end of my range. And some of these criteria, by the way, are considered good if higher, and some are considered good if lower. So market cap is a good if higher. Dividend yield also good if higher, so it has a 7.5% yield, which is very high. And volume 10-day versus 90-day is 2.69, so the volume is really ramping on this stock. That's why this stock was ranked number 1 against this particular strategy. Now, if none of these 5 stocks look interesting to me, I can click on Detailed Results, and this will give me the complete list of all 36 stocks. By the way, I can actually say buy or sell right from this page. So if I was interested in doing something with this particular stock, I could actually click that and go right to the Bell Direct Equity Order Entry page. But the really neat thing about Strategy Builder, in my opinion, is this tab called Performance. So I've built a strategy, but as of right now, I have no way of knowing whether this strategy is any good or not. So what I can do is say Calculate Performance, and I'm going to give this a name. I'm going to call it Midcap Strategy. I'm going to say Calculate Performance. So what Strategy Builder will do is perform a backtest. It has a built-in database of 5 years of history. And it's going to use that database to figure out what the performance of this strategy is over a 5-year period of time. So we're going to go back in time 5 years from today. We're going to buy a number of stocks which match the strategy on that day. In fact, the top 10 matches of the strategy. I'm going to hold those top 10 stocks for 1 quarter, at which time I'm going to rebalance. So I'm going to throw some stocks out. I'm going to bring some new ones in. I'm going to hold that next portfolio for 90 days and so on. So over 5 years, I'm going to hold a total of 20 of those portfolios. And I'm going to look at the total return of those 20 portfolios, including dividends, but not including the cost of trading. So that's called the equity curve. So what you have here, the green line, is the performance of my strategy over 5 years. So you can see that in the 2009 timeframe, it was not doing very well. Actually lost money. But then it started to do much, much better. And in fact, over 5 years, it's returned 72%. We can compare that to an index. So in red, we have the All Ordinaries Index. And you can see that it's actually lost 12% in the same period of time. So my strategy has done extremely well compared to the index. And if I wanted to pick a different index, maybe the ASX 100, I could pick that instead. I've still done very, very well. So now I have some confidence in my strategy. This is actually pretty good. I'm going to just add one more criteria to it just to see if I can make this a little bit better. So I'm going to try to add a technical analysis criteria, a bullish oscillator. And the one I'm going to try to use here is the Williams percent R, which I happen to like. And I'm going to re-backtest my strategy. So I'm going to call this now mid-cap strat. Oops. Oh, it's already restarted here on me. So this is actually called version 2 now, but we're going to re-backtest that new strategy, including this new technical analysis criteria that I've included, the Williams percent R. These backtests take a variable amount of time, but typically they're on the order of 20 to 30 seconds to backtest, which is actually quite amazing because it's a very, very complex calculation looking at the performance of these 20 different portfolios that you're holding over the last 5 years. I will also mention that there's something unique about the database that we're using to do this. This is what's called a point-in-time database. So let's suppose we have a company which issues results in January and says these are what our earnings are. All of a sudden July comes along and they say, oops, we're going to have to issue a restatement. We had an error in our January earnings. We're going to correct them with this July release. What is in the Recognia point-in-time database is information as you knew it at that point in time. So if the strategy is running against the data for January of that particular year, it's uncorrected data. It's the data as you would have known it at that point in time. So there's no corrections actually involved. So we're 80% complete at this point, so let's give that a couple more seconds and this should actually fill in. But you can already see that this particular strategy seems to be doing quite well. 95%. Let that fill in. Okay, so we're done. So the 5-year return of this particular strategy is 88.2% compared to my previous mid-cap strategy, which had a performance of 72.4%. So by adding this one new technical analysis criteria, I've actually improved the strategy slightly, and I've gone from an annualized return of 11.5% to 13.5%. And I can actually go down here and say compare against, and I can actually put all three on the screen at the same time. So the red line is the ASX 100. The blue is my previous strategy that didn't have the Williams percent R in it, and the green line is the new strategy that does have it. I can now choose to save this particular strategy. I can give it a name, mid-cap strategy with Williams. I can add a description if I want. Now, if I'm feeling very generous, I can now choose to share this strategy with the community. So if I click that, what's going to happen is this strategy goes into the community screens panel on the main landing page, and other Bell Direct users can choose to utilize my strategy to derive some stock picks or modify it to make their own strategy. So that's a very quick overview of Strategy Builder. So I've slightly run over my time. I'd like to now lead us into the Q&A session. So I'm going to turn the webinar back to Michael at this point to run the question and answers. Hopefully Michael's able to talk. Oh, so I'm going to have to do this myself. So let's just go down to the questions. Just give me 1 second here. I don't see any. Give me 1 second. I'll see if I can get some questions. I don't see any questions actually from the audience at this point, but if there are any, you can certainly email them to Bell Direct, or you can also send them to support@recognia.com, and we'd be happy to answer any questions. I'll also mention we have a support forum available, so if you want to go into the help button as part of the Recognia tools, you'll be able to find a link to our support forum where you can answer any questions. So thank you very much for joining us today, and I'll mention that we'll be back next week at the same time for another webinar at a more intermediate level to cover a bit of a deeper dive into technical analysis and how you can get more value from technical insight. Thanks very much for joining us on this webinar, and I'm sorry for any technical problems we had at the beginning of the session. Thanks very much.